All right, we are live. Testing, testing. We would go. Looking good. Welcome, traders. Welcome, everyone. We are Wednesday, September 17th, PM session. It is 10 minutes ahead of the FOMC news drop at 2 o'clock Eastern Time. So today was, we typically don't trade the morning of FOMC. Looking back to the morning, I'm not really seeing anything. Here was this blue line is the 9:30 open, and I'm not really seeing much of anything in here that I would have gotten into. The only thing I did see is prior or in the lunch hour, which is this yellow box here. I saw exactly what I was looking for, a liquidity sweep. It digged down into a level I was interested in. Here was my model, and so the trade already appeared, the reversal already appeared. Now, when it comes to the lunch hour, there tends to be a couple of different profiles that we can look for, a raid in continuation, and in this case, I felt it looked like a raid in reversal, which this low here was taken, and then the reversal formed in a higher time frame level. So let's go over here to this chart and look at the 1 hour. This is the gap that I was looking at, and we can see the price came down into this gap, exactly where I wanted to see it come before reversing. So unfortunately, I wanted FOMC to do this. I wanted FOMC to send price down into this gap so I could long it into these equal highs up in here. These are a nice high probability target. There's session liquidity, equal highs, and all of that. That's what I wanted. The other alternative, which we can see over here, I had these two arrows on my chart coming down into this level and getting an SMT and a smart money reversal to come up into this zone up in here. The other possibility is we see FOMC release, just slam price down into this target down in here, and then continue on for bullish continuation. By and large, I am bullish. That's how we played at all-time highs. We assume bullish until proven otherwise. Now, the proof otherwise for me is a 4-hour change in state of delivery. So what that would mean is we got this line down in here. If we get a 4-hour candle closing below here, that's going to kind of shift my narrative a little bit, which is possible because I'm also looking at this chart over here on the weekly. So here's our Monday, Tuesday, Wednesday. And while I am ultimately bullish, which is what my drawing here shows, I am questioning, there is the possibility that Tuesday is the high of the week. That's a typical weekly profile. So kind of this, what we're going to see here at FOMC in about 5 minutes, I think it's going to tell a lot for what we're looking at for the week. Obviously, when we look at the daily chart, there is tons of liquidity sitting resting below that has not been mitigated. So if we take a fib retracement, looking here at this, if we assume that this was the swing high, you know, we could easily see a retracement back down into discount before continuing on, because we've taken this high, and that's a compression candle. So today is going to be probably pretty telling. I'm going to assume long until proven otherwise, but it might be one of those days where it's actually reversing. It's really hard to call the reversal. All-time highs just tend to create more all-time highs. So yeah, a little tip for new traders is pay attention to the economic calendar. Pull that up over here. And we go to the forexfactory.com, we look at the calendar, and I keep this up on a screen over here all times. And when we have FOMC, we wait until at least after the 2 o'clock release. If everything presents itself perfectly, maybe you take it before the 2:30 press conference. Otherwise, wait until the 2:30 press conference for your model to present itself. We have 5 minutes to go, and I'm bummed that that everything already happened that I would be looking for right down in here. Like on well, I'm excited because like it happened, and I love seeing it happen, seeing my reversal model. But I missed it, and it's been a wild couple. Well, not a. I mean, yeah, the world's been wild the last couple weeks, but also I had so much going on. I have taken like 2 trades in like 3 or 4 weeks, and that is I was focusing on a couple other things and taking a break from trading for just a little bit to focus on a little mini business I have. But now I'm back to trading every day and working on my payout challenge. So what can we? So looking at this, what can we look at? We have some super. Look at all this equal highs up in here. London high. So we have some nice targets to the top side, which is my guess just because the morning delivered to sell side and cleared out a bunch of liquidity. I'm imagining it's going to push up. We shall see. Another tip for new traders, you don't want to be in a trade typically on the red folders unless you really know what you're doing, because there can be such wild movement so quickly that you can blow accounts. So we don't want to be in a trade before FOMC, CPI, NFP, any of these big releases. Some of the smaller movers, like an orange folder, yeah, maybe you can be, especially if you can get in early where you're not, if you got in down in here, let's say you were long off of this inversion down in here, right? So you went long on this candle, let's say, and your stop's down in here and your target's up in here. I still wouldn't do this personally on FOMC, but if it were another red folder and you were in here, you could move your stop to break even, and that way if it tore through your stop and it still slipped, you're still probably okay. Or even put your stop up further up into here to give it more room to slip, because what the candlestick can do is in that fraction of a second, it can slam down, clear everything out so quickly that the brokers can't close the trades, and then rip your direction without you. And then you've blown an account and you were right. So not something I like to do. And we're sitting at a little less than 2 minutes until the release. Oops. All right, so noting here, we do have some trend line liquidity building on this side. We do have some local relative equal lows. And then on the higher time frame, we do have some equal lows down in this zone. I'm not going to mark it right now because we have 27 seconds until the release. So let's see what happens. Noting this tailless candle right there, wickless. Price is already moving pre-release. We have 10 seconds to go. We have some equal lows right down in here. All right, it's dropping. And look at that. You see that? How quickly? That just was like a fraction of a second. Okay, so it ran for targets without me because my model appeared down in here. Which I see a lot of newer traders, they'll get upset. They'll be like, oh, it happened without me and I missed my trade. And then they'll get impatient and they'll be like, how do I get into this? And okay, we're going long. And then they get like, do something stupid like this and then they get wrecked. And instead, I encourage people to be really stoked that it happened. Here's this thing that repeats day in and day out, whether or not you're at the charts. And it's, you know, a lot like hunting, and you'll miss it some days. And other days, you'll get it. So my targets are still up in this zone, what I wanted to see. Price run to. So we can clean this up. Now I really can't build any scenario for a short. Let's take a look at YM, everything else. ES took Asia London highs right up there already. NQ did not. YM is just doing its own thing. It looks like YM was uncoupled. It was not in sync with NQ. You can see the morning YM was pushing up, whereas NQ was pushing down, ES pushing down. We really want to see them synced up. Maybe zoom out a little bit, maybe we'll get a better picture. So here, NQ is making a higher low. Whereas ES, it's just not very in, or YM's not very in sync. Let's look at ES. Both making higher lows. Okay. Content. Let's see here. I want to look up my trading notes. Here we go. So this is my notes here from ICT, and what we see is 2 p.m. does a Judas, an initial run to clear out liquidity, and then at 2:30 we get an opposing run. So that's kind of what we're on the lookout for. We can see here 2 p.m. initial rate release, 2:30 Fed chair speaks. 70% chance of reversal. In this case, they're saying look for reversals at after 2:45. They can occur earlier than that, but here's an example of the initial Judas swing, right, coming down, and then a reversal. So it took the previous day low, change in state of delivery, and then came back up for liquidity. So that's kind of what we're looking for here. I mean, I think this schematic is pretty simple right there. So what we want to do is start building a case for a short scenario. Which if it came back up into this, so I think what we have this was correct, came down into here. We can clean this up. So there is no long scenario at the moment unless we get some kind of accumulation phase in the next little bit. Gosh, it's looking... There's this gap that's starting to get inverted. So here, ES took the high. It's forming an SMT. So I'm watching this fair value gap right here on the 1 hour. So far, it seems like it's a strong rejection so far, but there's still 51 minutes left in this candle. Curious just even looking at the setup, you know, so if you would have set a limit order here on this, I was too slow, but setting limit order here for this inversion would have been 2R down to those equal lows. But I'm also not totally confident in that. Could be one of those scenarios where the SMT's created, it's not coming for this high up in here. Midnight, I've seen this before where it just taps into midnight open and rejects. You know, previous day low and midnight open is a good zone for a rejection too. It doesn't have to blast through and take the liquidity. You can save it for later. But I'm being careful because I am more bullish at the moment than bearish. I need a 4-hour change in state of delivery before I'm going to be easily considering shorts in any meaningful kind of way, even though I'm looking for, like, this is a short setup somewhere up in here. I can play it both ways. I'm just going to go lighter risk if it's short. Look at that. It's delivering. Gosh, price is moving nicely. I could have taken the long down in here, would have been a W. Could have taken this inversion here, would have been a W. So price is coming down and retesting kind of this whole accumulation zone down in here. Right there. Which is fine. I'd be bullish above this previous week high. Like the short would have been a good setup because I knew there was nice targets. But I wouldn't take a short down in here. All right, it is 2:12. That's 2 minutes outside of the macro. So this here also becomes a breaker now, bearish breaker. This liquidity right here is getting swept, coming for these equal lows right down in here. Beautiful delivery today. I just wish NQ had taken the liquidity up in here, then I would have gotten in. I always get a little hesitant when it's ES that does, or YM, even though there's SMT. I typically like to be in the asset. I like my asset to be the one that does the liquidity sweep. And look at that, even a short on that breaker would be playing out, but all this bullish SMT down in here. Which I love this SMT indicator. It draws about 90% of them, which is really nice, so I can keep my eyes on other things, and I still come in and check if there's no SMT according to the indicator. I also go in and manually check it. But it's the only paid indicator I have. It was like a one-time fee. It was totally reasonable. And if you want to save some of your time and make sure you're not missing any of the SMTs that are required for your trade setups, I'd really recommend it. I got a link below the video for it if you're interested. So at the moment, cool. Look at that delivery. So this is coming down to this level right in here, which was my other level of interest for a long. And what I'd love to see price take this, come form a little more price action, take it again, form a breaker, and then there would be a long setup. That's what I'd like to see. Now, will I get what I like to see? Who knows? Time-wise, it's not matching up. Hmm. I guess the question is, do any targets remain for a long? I gotta look at that real quick. I know there is on NQ. All this target's up above. Gosh, it is not the right time. What are we off? We're off 5 minutes. That's a larger stop loss. Oops, not even on the right screen. Did not pull the trigger. It is not inside my macro. I want to adhere to my rules as I'm getting back into it. So I did not take any position here. The way it's pushing up, it's starting to make me think it's not gonna do what I want, which was creating a breaker. So this liquidity down here was taken, tapped into the previous month's high too, in addition to taking the liquidity, the buy side that I was looking at, or excuse me, sell side. Not seeing anything on Twitter really. Retesting this inversion. Oh, my vicious poodle's barking. Gotta look on the, I can't see it, these screens in the way. I got a surveillance camera. Let's see. Oh, no one's here. Don't know why the dog's barking, but we have cameras around the house. And I got a TV screen that I'm gonna hang on the wall over there. It's for my kickboxing. We live way out in the middle of nowhere, and like there's so little choices. Like the town I live by, closest town is 800 people, and things are harder to come by. So I do virtual kickboxing called Fight Camp. So ES took lunch lows, and look at that. Look at that. See, now this is sketching me out. If this trade hits, at that point, that's 3 calls in a row. And the likelihood of the fourth being a loser is pretty significant, actually. So that sketches me out to actually enter a trade after 2:30. It's picking up my dog, isn't it? Texted my wife to quiet the poodle. All right. Man, it's really sweet just to see price moving as you expect it to. I feel like the last couple weeks, NQ's not been moving very, longer than that even. It's not been moving very nicely. And I almost just don't believe it when I see it doing exactly what I expect it to. And I feel like that's the story of the year. And as a newer trader coming up in these markets, I hear the OGs talking about how price used to be so much cleaner, which I can't do anything about that. And I, to some extent, feel it's wrong to sit here and blame it on the price action. I feel it's important to get in there and just figure it out, do what you got to do. So here on this trade, I would have, if I were in it, I would be going break even on it. Tapping into this bearish breaker. Let's see if this breaker fails. But what's happening right now for me in price action in this zone, it's going to be telling for the rest of the week, the rest of the month. If it rejects from here and continues lower, then I'm going to be much more bearish overall. Whereas if this is the liquidity grab, I can expect more continuation for the rest of the week. And I've learned to recognize personally when prices in these particular zones where I'm just not totally sure. Like up in here, it's like I was starting to see the signs of the reversal, but do you short all of this? I don't. Look at all this bullish price action all the way from September 2nd. It's really hard to go against that. So we have another 4 minutes until the FOMC press conference statement. So that's this red dotted line here on the chart. Marking out this fair value gap between these candles. What I don't like about this price leg right here is there's no potential for a bullish breaker at this point. The breaker would be massive. It would be this up here. And then this whole thing here would be the manipulation. So I was initially thinking this could have been the low, and I was wrong about that. Price came down and took that. I guess now saying that, I had anticipated either or. I had that marked on my 4-hour chart. I said price could come down into this level or this level. But I was more leaning towards this being the bottom, given what I was seeing down in here. All right, so this is 230. Yep. Just noting here on the 5-minute chart, we have a confirmed inversion fair value gap being retested. We can see the 1-hour candle. Not quite sure where it's going to close. Obviously no one is, but just indecisive at the moment. I mean, it's a super nice liquidity sweep. Took this 4-hour low, took all these lows down in here. I would be surprised if it didn't continue bullishly. But again, the market can do what it wants. This could be the high of the week. And I just want more information. And I'm happier to sit out and let it tell me what it wants to do so I can have more success later in the week than be scrambling in here. But as we had seen, my calls were 3 for 3 today. And I don't call them like full-on calls. They were slightly hindsight. It's my model presented itself nearly perfectly, and I didn't execute. All right, so this deep push on the 5-minute here, that's not a very bullish signature. It's gone too far. There's no reason for it to go down in here, in my opinion. So going back here, this trade would have been out at break even right there. So far, price is respecting this bearish breaker, this change in state of delivery. And the question sometimes becomes, you know, was this the fake move? Or is this the fake move? Usually I can tell because one doesn't tap into a higher time frame level. Both of these tapped into a higher time frame level. This tapped into a 1-hour gap. This tapped into a 4-hour gap. All right, we're 234. Still haven't pulled the trigger on anything yet, which is okay, you know, like it's better to be more conservative than liberal when it comes to trading. But I can be too conservative sometimes too. It's looking heavy. When we get this, you know, a dig into a liquidity zone like this, a pool like that, I really want to see a strong response out of there. So here the 15-minute is starting to kind of create some zebra stripes, barcode pattern, starting to. We don't want to see that continue. I am seeing a continuation model starting to form. So this swept that liquidity. No 5-minute level, no 15-minute level. There's no SMT. There's a gap up here too. Looking a little zebra stripey on the 1 minute too, because look at these candles. Barcode. There's this inversion here. And this did not sweep any liquidity. And we're kind of at equilibrium of this range here. If I draw this range, I can see the 50% level. Equilibrium 50% level is where price tends to want to go sideways. So it's not ideal to get into a trade at equilibrium if possible, which is why this line, this previous day equilibrium, is on my chart too. Just noting that can be a likelihood for a consolidation if we got back up into that area. This is based off what I'm seeing. I feel like I missed my trades. I wasn't confident and I didn't pull the trigger. More specifically on this one, I wasn't around for this one. I didn't pull the trigger on this short. I didn't pull the trigger on this long. And here was my buy side liquidity pool. Here was my sell side liquidity pool. So at the moment, I really don't have any liquidity pools that I can get in on. And I feel like that's a lesson I'm learning a little more lately, is hit it when it shows itself, because now I don't have a trade. And now is when, if you're not patient, you can start forcing it to happen. So oh, it was down here, wasn't it? And I was using the whole wick, which wouldn't have given me the 2R. So I'm just annotating these real quick. Overthinking might be the way to put it. Now I'll come back and I'll review that. I'll note that I was not feeling confident and that price delivered as expected. And I need to take that piece of information, and my time is useless if I go into tomorrow and I don't take that piece of information and build upon it. And so for tomorrow, I have to note that, and I'm going to actually go back and look at, I noticed that's been a pattern a little bit lately. I'm going to go back and look at some of these other days and probably build a little document and print that out. That way I can take a look at it before my next trading session tomorrow. But what I do know is I'm not going to have a trade setup for a while, probably. I'm rethinking. It could sweep this low, form the model, and go long. Maybe that's worth waiting for. We're outside of the 1220 to or 220 to 240 macro. Right there. I just feel a little bit like longs are not the direction at this point, but potentially. So I'll hang out and see here for a few minutes. Here we're looking at ES, the S&P. Four-hour gap. Just like that. So tapped into the consequent encroachment. Jeez. Just a huge gap on YM. Interesting. Right there, gap, breaker. Is the reversal just delayed? $221 ticks, $100 risk per micro. It's moving. Wow. Kind of a lower time frame breakers. They're not. SMT is not showing itself, so we can see the indicator. Oh, it is showing a London low SMT now. All right. It's just the stops are so big. I want some more flexibility. It's 1 minute outside the macro. This breaker's not perfect. It's just a 2-3 candle breaker. I'm probably talking myself out of it. But I remember I can only call so many trades right in a row, making me nervous. All right, we're inside the macro. Retesting this fair value gap. Inverting this right there. Probably going to be a failed idea. And if that's the case, I'm going to expect continuation. So here was the one shot that I saw for a potential long. Beyond that, I'm expecting it to just keep falling for quite a while. There's no other levels really. until way down in here, 24,206 kind of is the next target. This 1 hour candle closes in 7 minutes. So I'm going to expect this distribution to sell side, and pardon me, I'm going to have nothing to do for the next little bit, because I need to wait for a major liquidity grab before I can look for a long or a short. However, this is pretty much my line in the sand for a long until it gets down into here, and then there is the possibility for a long down in here. But and this is actually looking a little bit nicer for a long. You see these gaps here, but I'm not going to anticipate. Well, there's the 3 drives pattern, 1, 2, 3 drives, and then price reverses. But what I'm noticing here is this is a much nicer looking gap. You can see this little itty bitty one that failed, whereas here, and then the breaker isn't clear in here, so we can't anticipate a breaker. But here, I can anticipate a breaker. What I don't have is I have a new day opening gap, I guess. It's gonna run without me, huh? So 1, and I didn't pull the trigger. Here in particular, it doesn't have FFG support, which has been one of my questions on my trades. Is often there's a liquidity grab into a fair value gap, and that's what I look for. There was no fair value gap. There was a new day opening gap. Look at this. It's looking okay so far, with the exception of that tailless candle. Actually, I saw that tailless candle. I'll see if this plays out, and then at that point I think I'm gonna stop recording and take a break. I'm noticing the pattern too much of indecision, lack of confidence, and I need to come up with a strategy to manage that. Do something about that. Look at that. Probably would have closed it somewhere in here. Probably would have closed it a little early. Gosh. Nice, nice, nice. Well, cool. So, what? Looking back on today, I think this was beautiful and perfect. Down in here, I saw this short, couldn't take it. Said I didn't want to short at equilibrium, and this breaker here still fell. Saw the long here. Depending on where I would have placed my stop, it could have gone either way. Whether I was a little, it could have been a 2R, or it could have been a break even. And then there was no short right in here for me. There was this long. That would have been an L, and then this long would have been a W. So that would be 1 loss, 2 wins, and hard to say. This could have been a break. This wouldn't have been a loss. So that's sweet that price is moving like that, and moving so beautifully that it just goes and flows with what you think what it's gonna do. I am seeing that I'm just gun shy as I'm getting back into it streaming this week. I knew to be conservative up until right now, Wednesday afternoon, and I'm just gonna have to look into that and journal that a little further, because I'm usually not so gun shy. And I want to dig into that and find out, is that stemming from what price is telling me right now? Or is that stemming from taking such a long break from trading? So I'll have to dig in. And I think I'm going to shut it down there. That's too many trades that I just have not been feeling confident in. So at some point, I'm just going to force myself to do something, not out of confidence, but out of trying to break the pattern. So I'll shut it down here. Tomorrow's going to be Thursday, so